No worries. Thank you, Tim. Thank you also for having us there. It was a couple of communication interruptions as you were doing the introduction, so let's hope it all goes well. So Kalium Lakes, we're building our Beyondie Sulphate of Potash project in the Northwest Pilbara region. If you don't mind to skip over to slide 4 of the presentation, I can do a quick overview of where we are. Next one. Yeah, that one's fine, thank you. So Beyondie Sulphate of Potash project, we are located about 240 kilometers southeast of the mining town of Newman. Newman is about 2 hours flight just north of Perth, or if you feel like taking on the road, it's about 1,200 kilometers up the Great Northern Highway. We are in the final stages of commissioning our project, that is getting ready to commence commercial production of sulphate of potash. Sulphate of potash we'll talk about as a macronutrient in fertilizer. We'll talk about that in a bit more detail in one of the following slides. But we are producing this sulphate of potash, also more commonly known as SOP, from extracting the sulphate of potash from brine resources. So we extract the brine from underground via either a shallow lake aquifer or deep paleo channel aquifer. We pump it through a series of evaporation ponds where we evaporate off freshwater content within the brine. That leaves the minerals behind. We then harvest and we put through a purification plant to remove the remainder of impurities and produce the SOP. We source this brine from underground using pump stations, so either production bores or trenches, and it's a fairly straightforward and simple process, really. Construction of our project is virtually complete, 98%. We're just doing the final stages of product commissioning, getting our plant up to chemistry concentrations, and we've spent about $280 million on the project to get it to where we are today. Our process design is quite unique. There's no one that has produced potash in Australia before, so we have had to go internationally to find the right engineers and process knowledge, and we are using a German company called EPTEC. It's a joint venture between two groups, who is providing the process design and also the key process equipment. It's a small operation. We would be having 30 to 40 people on the site during steady state operations, producing at about 90 to 120,000 tonnes per annum. If you don't mind to skip over to the next slide. Just a few key numbers. I won't talk about all the tiles there, but earlier this month, we have achieved a significant milestone where we have produced, as part of commissioning, our first batch of SOP. And as I said, we are getting our plant concentrations up to the desired rate, so we can very soon begin with commercial production of SOP. We've got a very long mine life, not that common for projects in Australia to have 50 years of mine life or more. So quite a long-term opportunity and investment here. Not everybody knows, most people in the industry does, that SOP is 100% imported to Australia. So we would be looking to change that by being the first producer of SOP in Australia. Global market's about 7 million tonnes per annum of SOP. And if you look at our mine and reserves, we've got 5 million tonnes in reserve. It gives us about the 50-year mine life, but just on reserves, we have 88% of our first 30 years of the mine life is based on reserves. We touched on the capex and 98% complete. Offtake agreement, we'll talk about that in the presentation, but we have an offtake agreement in place with a company called K+S, or Kalium Salts. They're based in Germany, and outside of China, they are the largest SOP producer in the world. And under this offtake agreement, they will take 100% of what we produced, up to 120,000 tonnes per annum on a take or pay basis. Got very attractive and low-cost debt funding through NAIF, Northern Australia Infrastructure Facility, and also with KfW IPEX, which is a German arm of KfW for international project export funding. Attractive NPV, 484 million, and we've got some really good SOP price forecast, in particular for the next couple of years, lying ahead. If you can go to the next slide, please. A few achievements for us. So we have been building this project for the last 2 years. We've mentioned our first SOP production earlier this month. Very excited to get into commercial production very, very soon. We've completed the project within the capital expenditure budget of $280 million. We have hit every single milestone on the project schedule since May last year. So very proud of the team. We're not a big team here, but they've certainly delivered the project very good on project and on schedule and on budget. We are also starting up at the right time, right place. In Australia, with having to import all of its potash, but at the right time because SOP prices are really good at the moment, and we'll talk about that in some of the coming slides. We touched on the long life, and we will also talk about our expansion plans to go from the 90,000 tonnes per annum production to 120. Go to the next slide, please. Worth just touching on the two key types of SOP, or most common types of SOP potash that is used in the market. The most commonly referred to as MOP or SOP. MOP, also known as muriate of potash or potassium chloride. It's a larger market, about 70 million tonnes per annum, where SOP is 7 million tonnes per annum, as we've indicated before. But MOP has got about 40% of chloride in content, and that chloride component is toxic to some plants. So typically, your high value crops, fruits and vegetables, they prefer SOP over MOP. And some crops just can't deal with the chloride whatsoever. Chloride you can't get out. The plant doesn't absorb it. It doesn't go out of the ground. So very difficult to get rid of it once it's in the ground at all. There also is a price premium typically between SOP and MOP. SOP typically sells at about $150 to $200 US dollars per ton higher than MOP. If it wasn't for that price premium, anyone would prefer SOP over MOP. That price premium is largely driven by the relationship between MOP and SOP. And that relationship is really based on how, about half of the world's SOP is produced. And that is done by a process called the Mannheim Process. In this process, you will procure MOP as an input, or use MOP as an input with sulfuric acid. You will mix it at about 600 degrees Celsius and then produce sulphate of potash or SOP and hydrochloric acid. And because of this secondary production process, or producing SOP as a secondary product, the biggest cost of that process is the cost of MOP. And because it's such a large portion of the world's production, about half of it, as I said before, it introduces this price premium between MOP and SOP. That's also one of the reasons why Kalium is such an attractive project and it has such a great opportunity to get off the ground. It's because we're not a Mannheim producer of SOP, we're a primary producer of SOP, which just allows us to be in that lowest quartile of all cost producers on a global scale. So on the next slide, we have a graph that shows the price forecast outlook. You will see on the left-hand side the solid green line. That's the actual pricing that we've seen this year. Very, very steep trend upwards. That price increase largely driven by two factors. One is strong demand from farmers. We've seen some, record crop prices from good harvest this year, and all of those nutrients have been taken out of the soils and needs to be replaced. So very big demand for fertilizer in general, so not just SOP or potash. But then also we have seen the sanctions that's been put against Belarus, and that's significant because Belarus Kali supplies about 1/5 of the world's MOP, and as we've discussed before, MOP pricing has got a direct impact on SOP pricing. And with these sanctions that's been placed against Belarus, it has provided some limitation on their ability to export to the same areas, regions, and customers and routes as before. But it's also caused some uncertainty in the market where suppliers are looking for alternative sources of MOP. And all these factors have had a very, very strong impact on the SOP pricing. If you look at the price graph there, the forecast is based on the consensus that was done for us by CRU and Argus. And you'll see that we are looking at, when you see SOP prices above 550, 600 US dollars per ton, those are good prices. That's sort of where you want to see the price range. Once you start dropping below 450, that's the lower range of pricing. So we are seeing quite a healthy price forecast for the foreseeable future, really. So a very good time to start up a new project in this industry. So on the next slide, just a quick summary of some of our ESG credentials or highlights. Firstly, SOP in general, because you get the higher yields per acreage, and you don't have the chloride. Just in terms of deforestation, you get the benefit of the lower carbon footprint. In terms of what we produce, typically potash as a fertilizer produces about 0.46 kilogram of carbon emissions or carbon dioxide per kilogram of potash produced. In our case, we're almost half of that, so only 0.26 kilograms. So very good statistic there as well. Because most of our energy that we use is solar evaporation in the ponds. As we go through the slides, we will show you that as well. I'll have to speed up a little bit. About 96% of our energy comes from solar evaporation. It's just a process plant that runs off the gas engine. So we can go to the next slide. I'll quickly go through the different steps of the process and where we are. So a very simple process. We extract our brine, as you can see from the photo at the top left. We put that through a series of evaporation ponds where we evaporate off the fresh water. That crystallizes out the salt. That salt is then harvested, which is the photo on the top right. And that harvested salt is then put through the purification plant where we produce the SOP, which is then trucked to Perth. We can go to the next slide. There's a photo of our trenches and our bores. On the right-hand side photo is the production bore. On the left-hand is the trenches. You can see in the left comments, we've finished everything that we need to do for the 90,000 tonnes per annum, and a few extra bores we've got to add to increase production to 120. We'll go to the next slide. That's just a photo of the ponds. Everything we built and need for 90 is in place. You can see the trucking and harvesting process happening there. And to go to the 120,000 tonne per annum expansion, we just need to add a few ponds on the left and the right-hand side of the trains that you can see there already. I think I've got one or two slides left. So the process plant, just a few construction photos. You can see our ROM stockpile where we are feeding the salts. Don't have any wet photos there. Should have added a few wet photos. You can see in the front page of the slide, but lots of salt being processed in the plant to get our chemistry levels right up at the moment. The last slide, we've got a haulage solution in place. We talked about the backloading. To commence, we'll put the product in bags on site, and we will use the empty trucks that comes past our front gate back to Perth, those trucks that service all the other mining companies in the Pilbara, to take our product back to the depot and to the shipping port facility in Fremantle. So I think the next slide is just the project financials. I won't go into the details here. You can see our NPVs, IRRs, returns, all-in sustaining costs. We've got an upside there where we're looking at a potential reduction in the mineral royalty, which we are negotiating with the WA state government. And we're also hoping to see some easing of some of the pressures we're seeing in costs as a result of COVID. Schedule, we've talked about our first production that we've achieved. We're looking to ramp up to nameplate within the next 6 months and then getting to that 120 expansion level by the end of next year. And in the meantime, we will continue with some value-adding opportunities, which we haven't got covered in too much detail in this presentation. So that's it. We are at the stage of our project we are substantially de-risked. We're getting ready for commercial production. We have commenced our expansion plans to be at 120,000 tonne per annum production level by the end of next year. We're working with world-class partners, not just on a technical level, but also with our financiers and our offtake partners. We've got a very long life mine, attractive economics, and we've got some great growth and value creation opportunities as well. So that's it.
Thanks, Rudolph.
Thanks, Tim.
We've got lots of questions. We don't have much time, but I'd appreciate if you could probably type in some of the answers to these questions so you can answer them live. Now, BHP made over $5 billion US dollar investment in potash in Canada. How has that changed the landscape for potash?
BHP has been trying to get that project going for a very long time. And if you look at the presentation that they released on the back of that announcement to proceed, you will see that it's also on the back of some strong forecasts on pricing. And also because by 2025, you start to see that supply-demand ratio is getting out of balance. So you've got a demand increase that outgrows your supply capacity. It's not likely to impact the SOP market significantly, because by the time they will get into production, you will see from their forecast, they are just, supplying a market demand that would be there and ready to receive the product. So it's a big project. I don't see MOP really competing with SOP in that space. And
there's a question here, with the current price of SOP, are there any plans to hedge the product moving forward?
Look, we are hedging as best as we can. It's not necessarily that easy to hedge the product, but we are working on is, trying to fix prices as best we can and lock in contracted sales with some of the larger buyers in the industry. So with our offtake agreement with K+S, we actually get the benefit of the end customer price, and we share the cost of shipping component between where we deliver CFR Australia and to the customers. So not that much of an opportunity to hedge, but certainly in the next 2 years, we are looking at a pretty strong forecast for pricing.
And is there any plans to have, solar as your source of energy out there, given ESG requirements from the investment community these days?
We are certainly looking at those opportunities, in particular for the more remote pump stations, for the bores and trenches. Looking at different options at the moment, looking at, whether we put a renewable wind turbine in place with overhead lines to feed some of the bores, whether we go solar with battery power. So we haven't talked about that too much in the market, but that certainly is something we're working on in the background to see if we can add further value to the project.